Welcome to your own channel, Romance with Finance, a brand of Financial Freedom Hub. On this channel, you get the videos and information on personal finance. Let us continue our ongoing journey in the zoo where we visited. In this zoo, we have already seen bulls, bears, rabbits, turtles or tortoise. Thereafter, we saw ostrich, herd, and chicken. The next animal whom we would be meeting is a snake. Snakes are sly in nature. They often strike unexpectedly. Similarly, in financial markets, a lot of times there are unexpected movements that happens in the market. These unexpected movements are not expected by traders or investors. These unexpected movements are a sudden downtrend in a strong uptrend move or a sudden spike on the upside in a downtrend move. As snake moves zigzag, similarly a lot of times market also moves in a zigzag way. That reveals that there is no clear trend in the market and markets can't be trusted, just like the snake. Such deceptive moves like snakes represents market traps or false breakouts or breakdowns, wherein investors or traders often get trapped and they lose money by entering in a wrong trade. Such type of event is often known as whipsaws. The next creature which we will see is ant. We all have seen ants. Ants are disciplined in nature. They are hardworking, team worker, and they work together to accomplish things. One ant might seem too tiny, but the whole colony can achieve greatness. We all have seen ants and we all know that ants are hardworking. They keep on searching for their food in the group and they move in a group and in a queue. They have a specific job and ants don't have ears. Similarly, in financial markets, ants represents those investors who also doesn't have ears and they do not listen to the market noise. These disciplined investors keep on investing their money on a regularly basis in a disciplined manner by focusing on long-term wealth creation and they ignore the market volatility. These investors opt in for systematic investment plan mode and they keep on investing whether the markets are at highs or the market are at lows. If the market is in uptrend or the market is in downtrend, they keep on investing regularly and in a disciplined manner. The next creature which we will be seeing is the whale. We all know that whale is the largest mammal on the planet. Since whale is the largest mammal and also amongst the largest creature on the planet, hence in financial industry, the whale represents the big investors who are massive and powerful. These powerful investors and traders are the institutions or wealthy retail investors or the corporates such as association of person, body of individuals, corporate house, private companies, public limited companies, proprietorships, and obviously the institutions which are domestic institutional investors known as DIIs and foreign institutional investors known as FIIs. The big trade and investments done by these institutions often impacts the market and the market's trend. Whenever any foreign institution invests money in a particular stock in Indian markets, then that stock shows a move in upside direction and it further keeps on moving as later it attracts more investors. On contrary, if big institutional investors, either FIIs or DIIs or some other big investors like corporates, banks, financial institutions sell or redeem their investment by offloading a big chunk of their portion in a particular stock, then that particular stock shows a downward movement and also enters in a downtrend, as thereafter it also witnesses a follow-up selling by other small and mid-size investors as well. Are you wondering about the reason why does it happen that when huge amount is invested by big investors, then why that particular stock or why the market starts rising in an uptrend, or vice versa, when a huge amount of investment is being sold by a big investor, then why the particular stock price keeps on falling or the markets enters in a downtrend? The reason for that is law of demand. If you all have studied economics, then you must be aware about the law of demand. For those who have not, do not worry, let's learn it here now. This is a graph wherein we have an x-axis and we have a y-axis. On x-axis, quantity demanded is represented, and on y-axis, price is represented. Now, DD is the demand curve which shows the demand of a particular product, and SS is the supply curve which shows the supply of a particular product. The point at which they both intersect each other is the E point, which is known as equilibrium, where the demand and supply are both equal. So the OP is equilibrium price and the OQ is the equilibrium quantity. These are the levels which are derived when we draw a perpendicular line to both of the axes. Now let's understand a scenario wherein the demand is increased. When the demand increases from DD level to D1, considering supply is unchanged, then the equilibrium shifts from E to E1, the price rises from OP level to OP1 level, and the quantity demanded rises from OQ to OQ1 level. For a layman, let's understand the law of demand with real life example. You must have seen an auction scene in some of the movie, daily soaps, or in some CDs. During auction, there is a single product that is a limited supply with a multiple interested buyers. That means the demand is high. These buyers want to purchase that product and hence they keep on bidding for that particular product and they keep on increasing the price so that they can eliminate a lot of other buyers who are their competitors. This way the other buyers find it uncomfortable to purchase that product as the price is quoting on a higher side with the passage of time, and at the end it is purchased by someone who bid at the highest level. So once the bidding is over, the price of that particular product is also not increased because that has been already purchased by the highest bidder. This means that now there is no demand of that product and hence the price is also not increasing. Learning is a never-ending process and we keep on learning irrespective of our age. Hope you are learning from this video. As they say that learning is never ending. However, this video has come to an end. We are not done yet with the birds and animals who all are present in financial markets. The other type of birds and animals would be covered in the forthcoming video. If you think that this video was helpful and you were able to grab some knowledge and you attained some wisdom from this video, then